The foreign exchange market, also referred to as Forex or FX market, is the largest financial market in the world with over 5.3 trillion changing hands every single day. The reason for this is simply because we all participate in Forex transactions at some point in our lives.
Now, let's say you live in the US and you decide to travel to the UK. Once you're in the UK, you need to convert your US currency for the British pound. Therefore, either at the airport or the bank, you would conduct your transaction. Now, the typical person doesn't think or realize they're simultaneously selling their US dollar and buying the British pound. However, what you're actually doing is a Forex transaction.
Now, to add to the volume of Forex transactions, we all have large corporations. For example, we'll have US companies purchasing products and services from, let's say, Japan and or China. They will need to convert their US dollars to the Japanese yen or the won, respectively.
Now, you should be seeing the bigger picture of why the Forex market is considered to be the largest financial market in the world. When comparing the New York, Tokyo, and London Stock Exchange to the Forex market, it exceeds the daily transactions of these financial institutions combined. Unlike other financial markets that operate at a centralized location, i.e., the New York Stock Exchange, the worldwide Forex market has no central location. It is a global electronic network of banks, financial institutions, and individual traders, all involved in the buying and selling of national currencies.
Unlike the stock market, the Forex market cannot be manipulated by insider trading. This is due to the fact that no one individual or corporation can move the price of a currency because of the size of the market and its decentralization, meaning there is no physical building where transactions are processed, unlike the New York Stock Exchange.
Without a doubt, the governments and central banks are the big players in the Forex market. Normally, the central bank is an extension of a country's government and will usually formulate and regulate policy in conjunction with the government. Before I tell you who the other Forex market participants are, I want to let you in on something strange about the central bank. Unlike retail traders who trade to make profit, central banks don't care about profit and loss in many of the transactions they perform because there are different purposes behind what they do in the Forex market.
For example, Bank of Japan has to keep the value of their Japanese yen consistently low because Japan's economy is dependent on the export of their Japanese products, and other countries will have less tendency to order their products if the value of the yen goes extremely high. When the yen goes up in value, BOJ buy other countries' currency against the yen or vice versa. There is no doubt, of course, that they will lose a lot in this process, but they really don't care because it's more important for them to keep the yen low. This causes the other countries to keep buying their Japanese products, therefore, the country will make profit in the long run. Central banks, such as Bank of Japan, handle losses in these transactions to keep their industries working. Not everybody trades for profit like retail traders.
Some governments believe that it is important for the central bank to be independent of the government in order to allow it to execute its policies more effectively. Also, to balance its goals of controlling inflation and keeping interest rates low, therefore increasing economic growth in the process. Another function of the central bank is to control reserve volumes to ensure certain economic goals are being fulfilled. For instance, once China had pegged its currency, the won, to the US dollar, it has been purchasing millions of dollars worth of US Treasury bills to ensure the won is maintained at its desired exchange rate. Central banks usually turn to the foreign exchange market to regulate their reserve volumes. They have enough power to exert their influence on the currency markets.
Interbank transactions takes place on electronic brokering systems that are entirely based upon credit. Banks that have established credit relationships among each other are the banks that are involved in transacting business with each other. The bigger the bank, the more credit relationship it will have, which leads to better pricing for its customers. Similarly, when a bank is small, it has fewer credit relationships and lower priority on the pricing scale. Banks generally operate as dealers since they buy, sell currency at the bid and ask price. One of the main ways a bank earns money is by exchanging its currency at a premium to the price it paid to get it. Due to the fact that the Forex market is decentralized, it is extremely common to see different banks offering different exchange rates for the same currency.
Another set of players are considered to be hedgers. Most of the time, banks need to deal with businesses that are involved with international transactions. These businesses are the biggest clients most banks have, and regardless of whether the business is buying from or selling to international clients, it needs to deal with the volatility that is present in the exchange rates.
Dealing with foreign exchange poses a huge risk for many multinational companies due to the fact that the amount at the time of purchase and at the time of payment may actually grow unfavorably. For instance, suppose that a Japanese automobile company orders machinery from a Chinese manufacturer to be paid in 2 years from now. Due to the fact that the exchange rate is free to fluctuate, the Japanese company has no way to determine whether it will end up paying more for the yen at the time of delivery. One way in which the company can reduce the degree of uncertainty involved with foreign exchange risk is by participating in the spot market and making a transaction immediately for the currency that they require. However, the problem with this is that most businesses may lack the funds to make spot transactions and would prefer not holding significant amount of foreign exchange for an extended period of time. Therefore, businesses usually employ hedging strategies to lock in a specific exchange for the future or to eliminate all forms of exchange rate risk for that transaction.
For instance, if a US company intends to import a BMW from Germany, it will have to pay in euros. If the price of the US falls against the euro prior to the payment, the US company will face a financial loss. In cases such as these, the US company could lock the current exchange rate to ensure it does not face any financial risk of dealing in euros at the time of payment. Such contracts could be forwards or future contracts, or both. Another set of players in the market are speculators. These include private entities, banks, and individuals. Speculators are mainly behind the high liquidity in the Forex market. Instead of hedging against fluctuations in exchange rates or exchanging currency to finance international transactions, speculators choose to make money by using fluctuating exchange rates to their advantage. One of the most renowned speculators in the financial market is George Soros. Soros is a billionaire hedge fund manager and is mainly known for speculating on the fall of the British pound, a strategy that earned him 1.1 billion in about a month. In another extreme case, a derivatives trader with England's Barings Bank saw his company collapse when he took speculative positions on future contracts in yen. This resulted in a combined loss of up to 1.4 billion. Hedge funds are some of the biggest and most controversial speculators in the foreign exchange market, since they are basically unregulated funds that use unconventional investment strategies to gain large returns.
In the past, trading forex was limited to larger institutions and banks. Thanks to advanced technologies and market progression, as mentioned earlier, retail traders can now play in the forex market with any amount of startup capital as low as $50 with some brokers and from the comfort of their own home, from a smartphone or tablet. You can even start forex trading by creating a demo account with any broker without spending any of your own money. We will walk you through creating a demo account at the end of this module.
Another advantage of trading Forex is high liquidity. This is caused by the vast volume being traded daily. Unlike the stock market, where when selling a stock, there needs to be a willing buyer, in the Forex market, there's always a willing buyer and a seller at any second of the day. This means you can liquidate your position with a click of a mouse. The Forex market is open 24 hours, 5 days a week, from Sunday evening at 5 p.m. Eastern Time to Friday 5 p.m. Eastern Time. Traders from all around the world participate in this huge financial market in 3 major sessions. These sessions are the Asian session, the European session, and the US session. This wide range of trading time offers the trader the opportunity to trade the Forex market at a time convenient for them without interfering with their daily activities. This will be discussed further in more details.
Finally, another advantage is that there are no middlemen. This means you have full control over your finances. Successfully trading Forex and making a living from it requires knowledge about how it all works, along with strict discipline and the proper mindset. The next section will familiarize you with the basic concepts of Forex trading that you will require for trading the financial market, as it is of utmost importance that your foundation is solid before you start your journey to become a full time trader. The potential for financial freedom through the Forex market is right at your fingertips. Okay, guys, thank you for watching our short tutorial of our educational course, which will be online soon for purchase. This will include 8 hours of understanding how the market works, the psychology behind market patterns, identifying key areas of support and resistance, and money management. Now, before I go, please click the subscribe button below and share with your friends and family. By the end of the year, our goal is 1,000 subscribers, so help us make it happen. Thank you.